let a good crisis go to waste. And that's the wealth transfer motto used by and power as well, used by governments and the very wealthy, the 1%, to transfer wealth their way. Well, holding real money that holds purchasing power puts you in the position to grow your wealth base during the crisis. And the question is, with the markets, I mean, we've talked about this since 2008 and how addicted the markets are to all of this free, cheap money, this massive amount. And so you really have to ask, can they stop? Can these addicts stop? Can the central banks really stop? So essentially, for those that haven't been paying attention or watching this or understand what quantitative easing is, it's new money creation. Now, the stated intention, whether this is a real intention or not, I don't know, but the stated intention is intended to stimulate spending and manipulate markets to force people out on the risk spectrum, to force them into stocks, okay? And they reduce interest rates all the way down. But it's it goes after the forebearer, which is the trickle-down theory, which they admitted doesn't work. You give the money to the top, and it goes through the system, and then the bottom gets it. But we see what happens and what the bottom really, really gets, and that really hasn't changed because obviously it has exacerbated wealth and income inequality. So the Bank of England creates new money. They buy or the Fed, or the Bank of Japan, whatever, they create new money, and they buy corporate and government bonds, and mostly government bonds. Interesting thing about that is the perception of the distance between the supposedly independent central bank and the government, but we'll talk more about that in a minute. Then the proceeds from those bond sales go into the system and in theory then trickles down to the bottom. Corporations, individuals spend it. Now, I want you to see the transmission mechanism because this is all by design on how they manipulate you. The first way is for portfolio rebalancing. In other words, inspiring you to sell something that you perceive as safe, like a bond, which is really a debt instrument, hard for me to think of it as safe, but okay, safe, and go again out on the risk spectrum to buy risky stocks. And if you look at the markets these days, there is rampant speculation, which we've talked about over and over again, because entities and people believe that the Fed will come in when the markets drop. So it's created a lot of moral hazard. When these bonds are sold, funds are deposited, then typically used to buy other financial or real assets, pushing prices up and interest rates down. Low interest rates encourage even more debt and even higher prices, and hasn't that been what we've been seeing? Signaling, also known in this country as forward guidance, where they tell the markets what they're going to do. Oh, well, we're thinking about tapering. They can't taper, but we're thinking about tapering, and we're going to do it at a glacial pace. We're thinking about raising rates, or we're not even thinking about raising rates. That's all forward guidance. That's letting the players know the central bank intention so that they can get into position and benefit. And then market liquidity. So QE bond buying lets investors and traders know that they can sell these bonds at any time, thus encouraging more government and corporate bond purchases. Because if you think that you can't sell something, then you are less likely to buy it in the first place. So the government is basically, or rather the central bank is basically letting the markets know that we will buy those bonds back, and you can feel comfortable going into these markets and trading or getting or taking on more risk. And then the wealth effect, which again goes back to the trickle down effect, because the rising prices of stocks and bonds and real estate assets makes people feel wealthier and therefore more likely to go out and spend money, take on more debt. There's inflation, and that's official inflation, which we know is not really reflective of what the inflation is that people typically experience. So why are inflation expectations and they're raising rates? Why is that not having the intended impact? Because the personal experience has become too obvious. And that's the big concern in this country, is that the Federal Reserve is behind the 8 ball. We have this inflation, but they are staying the course. They're saying, nope, just transitory. We're not going to do anything to try and stop the inflation. We're going to keep pumping $120 billion into between the mortgage-backed securities and the treasuries every month. We're going to keep interest rates anchored at 0, and we're going to allow inflation to run hot. Remember, I told you when they went to an average, when they couldn't hit their inflation target for 10 years, for a decade, and they're going to allow it to run hot. I warned you about it then, and, we can see it all coming to pass now, for sure. But yeah, why do they lose credibility? Because what they're doing isn't working, and it becomes apparent to the public. Central banks are losing control of inflation expectations because inflation is rising. Shocker. Seriously. You can't make this stuff up. Central bank credibility rests on the strengths of the bank's reputation for operational independence from political decision-making. This reputation is fragile, and it will be difficult to regain if lost. I would say it will be impossible to regain when lost. Not if. It's more a function of when. There is a widespread perception, including among large institutional investors in government debt, that financing the government's deficit spending was a significant reason for quantitative easing. Now, they want us to think, no, this was all about helping the economy, the underlying economy, the real economy. But if negative perceptions continue to spread, the Bank of England's ability to control inflation and maintain financial stability could be undermined significantly. You think we're going into hyperinflation? I hope you're ready. Boy, oh boy, do I hope you are ready. Because this is the only thing that will protect you from that hyperinflation, not their products.